we tell if a company is healthy? Not even just from a biblically responsible standpoint, but also from a fiscal responsible standpoint as well. What are the determining factors to see if a company is truly healthy?
The thing that I think we need to focus on first, though, is that God's economy isn't fueled by the same principles that the world's economy is fueled by. So, we have a dual, kind of a dual mandate, a dual components here that we look at. The first screen is, is a company using shareholder money to promote an ungodly agenda? Are they profiting indirectly or directly from funding things like abortion, pornography, the LGBTQ agenda, so on and so forth? So we would do well to remember that, to seek to honor God first, because, we know in Scripture it tells us that God honors those who honor Him. God trusts those who have been faithful and obedient with their money by giving us control and access to more money. So we cannot discount the value of honoring God with our investments. That doesn't necessarily mean that we're going to have a higher return just because we're honoring God. Our rewards may certainly be eternal. We may not even see a good bit of them in this lifetime. In fact, I would be happier if I saw more of those rewards in eternity than I do here on earth, because we're going to spend a lot more time there. But I also
Amen.
don't believe that we have to sacrifice return to pursue a biblically responsible investment strategy. Even if we did, though, doesn't it make a statement to the world about what is most important to us? It's like tithing. It's anathema to the world when they see someone tithing and giving sacrificially, even if they seem to be less financially blessed or, maybe struggling in their finances. It's anathema to the world to see someone who will be obedient and actually do what the Scripture asks us to do. Now, once companies have passed that BRI litmus test for us, we turn our attention to the more worldly measures.
Shannon, I think it's so important for us to remember, just how much emphasis the Bible puts on the moral side of money as well. I read this morning, I think 15% of Jesus's parables were about money. So it's really, really important. And we have to get the spiritual side of this right before we can get the fiscal side of it right.
Makes the rest of it really easy.
It does. Yeah, it really does. So, but with that in mind, it is still important to know if a company is fiscally healthy. So how do we determine that as well?
Well, we are in the midst of earnings season. So once a quarter, publicly traded companies will report their earnings. They'll tell us, did they bring in more or less revenue? That's total money in than they did the last quarter. They'll tell us, they'll talk about their sales. They'll also talk about their expenses. So, we're going to look at, are their earnings and sales rising on a consistent basis? What do their profit margins look like? If they don't have good profit margins, it means that they're not managing their expenses in a good way. So we talked about this employment cost index. It means that the cost that companies spend on their human resources is increasing. So what happens if they don't pass that along to consumers in the form of increased prices? It means that their profit margins shrink. So we're looking at profit margins. We look at the relative strength. That's a number of factors compared to the peers in the same industry. So who are their competitors? Are they doing business better than their employees, than their competitors? We look at their debt. Are they using other people's money responsibly? Unlike the federal government, are they taking advantage of access to capital? Are they deploying that capital in a efficient way? We also look at things like PE ratios. Now, I don't think that you can look at a PE ratio in a vacuum. You can't just average them all together, and you can't evaluate technology companies' PEs the same way that you evaluate energy companies' PEs. We also look at dividends. Do they have if they're paying a dividend, are they generating enough cash to keep that dividend in place? Are they increasing their dividends over time. If they're increasing their dividends over time without seeing the burden on covering those dividends increase, that means that they're making more money. They're returning value to shareholders. We look at their historical stock prices. So the market ultimately determines the value of a company by determining the price. We have a free market system. And so stock prices are determined by who's willing to buy a stock and what they're willing to pay for it, and what someone is willing to sell that stock price, those shares of stock for. So there will be bumps in the road, but if a stock price has a positive long-term trajectory, it means that it has been successful in navigating the good times and the bad times, and that it most likely has a good chance to continue that track record.